morning. It's a great pleasure to be here and presenting to you the state of global demand today. My name is Bjorn Huetter. I'm with S&P Global Mobility for 15 years now. And you may know us as S&P Global under a number of different names. So we've also, just like many in the industry, have gone through a number of different acquisitions. You may know us as Polk, you may know us as IHS Automotive, you may even know us back from the days as Global Insight. But what hasn't changed fundamentally is what we are doing. We are providing data for actuals and forecasts to help our customers, both on the OEM side as well as on the national sales company side, to be effective in the value creation process. So we provide information and expertise, basically across all of these stages in the value creation process. We have a lot of ground to cover. In the remaining 24 minutes, I'm going to walk you through these 5 topics, starting off with demand from a global and regional perspective to the OEM perspective. We're going to continue to look at propulsion trends, what's happening currently out there. We're going to continue zooming in on Chinese OEMs and what are their end market entry strategies. And we're going to finish with just a few slides on evolving retail strategies. So without further ado, let's go right in on global and regional demand. And I'm going to start with a bit of history, in fact, going back as much as 2005. So after the collapse of Lehman Brothers and the financial crisis, global vehicle demand has recovered quite well, actually. And for the next 8 years, we've seen steady growth, taking global demand to new levels of, on average 74 million, and then subsequently to 88 million units of growth. Now that was pre-COVID. Then COVID came, and to most of us, this will still be pretty fresh in minds, where we have reached a new peak with above 19 million units. But once COVID hit, the average annual volume was taken down quite significantly if we compare that to the previous plateau. So previously, we've had reached 88 million units annually on average. That was taken down quite significantly to about 18 million units on average. And you're all aware of some of the drivers, the chip crisis that has happened, which resulted in a very profitable phase for both the OEMs, their dealerships, and also in the remarketing area, very profitable times as a function of the chip crisis. But then the supply chain situation improves and has continued to improve. So let's take a look at where this has taken us last year. So we're now looking at 2025 year-to-date against 24 year-to-date. And by year-to-date, we mean values all the way up until September. So let's take a look where recovery is coming from. And it continues to be Greater China that has contributed about 1 million in volume growth, together with North America and South America taken together, also contributing about 1 million of vehicle growth year-to-date. Now, what does that do to market share? So the table on the right-hand side looks at the market share that each of those regions has. And as a result of Greater China having grown, it has also grown its market share of the world. Greater China, we see as obviously mainland China, Hong Kong, and Taiwan as well. Now that was at the expense, unfortunately, being in Europe, of Europe having declined in a bit of share. So on the following slide, let's take a look at Europe only, zooming in on Europe, what has happened in terms of countries. Now, first of all, demand in Europe year-to-date is slightly down by about 1%, or about 120,000 units. But our definition of Europe does include Russia. Now, if we were to exclude Russia for the time being, we would actually be looking at a modest uptick in terms of 1.1%, with some of the drivers with some of the drivers being, for example, Spain and Turkey. Now in Spain, demand year to date has been driven by both the private demand, predominantly the private demand, as well as the fleet sector. What we do see some decline in the Netherlands and in France. In both of these markets, September has been a good month, but not good enough to compensate for some of the losses that we have seen year to date so far. So that was quick, and we move on continuously quick with a look at the OEM perspective. And again, we're starting with a bit of history, taking a look at pre-COVID, where actually are we coming from. So in 2019, prior to COVID, Volkswagen was the largest OEM, even above Toyota. But then when COVID came, all manufacturers declined, and also Toyota and Volkswagen have. Now, Toyota has come out of the crisis better than Volkswagen, at least in terms of vehicle volumes, and Volkswagen up until now has not surpassed that 9 million threshold again. On the right-hand side, we're seeing the development of that volume in terms of market share. So for each of these years, we've basically taken a look at the ranking of who are the largest vehicle manufacturers. And as we can see, we just talked about it, Volkswagen has been replaced by Toyota. Hyundai and Kia has kind of firmly established itself on that third place. We're also seeing GM kind of in the middle ground. We're seeing also some losses, unfortunately, particularly by Mercedes and by Mazda as well. Now, some of that may have been deliberate, right? Mercedes was transparent about sacrificing volumes for profitability, part of their luxury strategy. And we see some newcomers. We see Tesla emerging and establishing itself in the top 20 firmly, and we are seeing the rise of BYD starting in the top 20, but then also manifesting themselves firmly in the top 10 as well. So looking again at what is happening now, so current year to date, up until September, just a few moments ago, we have looked at where did the growth come from. It was particularly China, which contributed 1 million, and it was North and South America together. And not surprisingly, as a function of that, we're seeing predominantly Chinese brands that have been able to benefit from that volume growth, notably Geely, BYD, XPeng, Xiaomi, and Leapmotor, for example. We're also seeing, driven by the growth in North and South America, the OEMs that are strong, have a strong foothold in that market, notably Ford, General Motors, but also Toyota, that have been able to benefit from the market growth over there. If we now zoom again into Europe, here we have taken a look at the top 20 brands, top 20 volume brands, to see who are some of the beneficiaries of that, modest 1.1% growth if we were to exclude Russia. And it is predominantly the Volkswagen Group with brands such as Cupra and Skoda and MG and Volkswagen as well, that have been able to benefit from volume growth that we have seen in Spain, for example. Now, on the flip side, we also continue to see how Mercedes-Benz is struggling volume-wise, and again, some of that may be intentional. We're also seeing the brands within Stellantis having a hard time in their core market in Europe. And we're also seeing Tesla, which in 2024 has seen its first year-over-year decline, and that decline has also continued in the first 9 months of 2025. Moving on to propulsion trends, and here we are using the term NEV. NEV is new electric or new energy vehicles, a term being used predominantly in China, and it comprises of battery electric vehicles, plug-in hybrids, fuel cell, and also range extended vehicles. Now here we're taking a look, first of all, at the adoption rates of NEVs in China. And we have, for the first time in China, surpassed the 50% threshold, where there's, kind of equal between NEVs and, well, ICE, let's say. This is driven for a number of years by financial incentives from the government. So it's very intentional, this shift. And as we will see on the next couple of slides, this is helping the Chinese industry quite a lot to be competitive also on a global scale. If we now look at Europe, here we have zoomed in on the European Big Five. We're looking at a slight pause in 2024 as also being driven by Germany and this removal of subsidies. But as we then look into the first 9 months of 2025, we see strong acceleration of NEV growth again. And also that is driven obviously by financial incentives, but also because of new models in the smaller segments with much more price competitive offerings. Subsidies is a space to watch as we enter 2026. If you have followed the press, the German government is considering to reopen the purse and to again reintroduce subsidies for a particular euro threshold. So that should hopefully help with the NEV adoption. Likewise, in the United States, we're seeing also the importance of subsidies because, first of all, a much more muted approach or a much lower NEV adoption. If we do look at the third quarter, then there is an uptick again that is fueled by the removal of tax incentives, where there was a $7,500 tax break for new vehicles and a $4,000 tax incentive for used vehicles. That was discontinued until September, and as such, as a function of that, we have seen quite a rush in Q3. But over the next coming months, we can expect that this is now going to be reduced quite significantly. Now, this one again looks at Europe, and here we have looked at 3 key markets, and hopefully this is visible to you, but basically we have taken a look at new vehicles and used vehicles, zooming in just on the 0 to 3 years age. Now, what is striking to me when I look at this chart, and hopefully you would agree with me, that we see a relatively similar pattern. If we look at plug-in hybrids, for example, there's a strong correlation in France and also in Germany, where you can see the fuel type in used and in new follows kind of the same pattern, right? So that's valid for plug-in hybrids, it's valid for hybrid electric vehicles as well. Now, in contrast, if we look at battery electric vehicles, this seems to be much more muted, much slower in terms of the adoption rate. So I was wondering why that is the case. So I looked at each of these fuel types to see what is the fleet split by fuel type. And probably most of you will know better than me that within the plug-in hybrids and the diesel, we have a very, very high fleet share, 70 to 75%. In Germany, up to 80% in terms of its fleet share, if we only look at diesel. Same applies to plug-in hybrids, by the way, on the petrol side. But on the battery electric vehicle side, we see a much higher private share of consumers. And with that, there are much, much longer cycles to replace their vehicles. So that is one of the reasons why we're seeing a much, much slower adoption rate, particularly if we look at battery electric vehicles. So this one I think is another relevant one. Here we are looking at average MSRP. MSRP stands for manufacturer suggested retail price. So it's basically list price, not transaction price, basically list price, what you can see on price brochures. And here we are comparing again NEV vehicles against ICE vehicles. And what we're seeing in China and in the US, in China, across a number of different segments, B segment, C segment, but also the D segment, we're seeing that in China there is a almost a price parity between the different ICE concepts. Now, why is that relevant? Well, many stakeholders in the industry think that once this tipping point or this inflection point has been reached, that is going to provide even faster adoption for the NEV space. So that's why we're seeing in China that inflection point has already been reached. And just 2 slides ago, we've also seen how that is shaping the EV adoption rate with 50% of share. So let's move on to review some of the product and pricing strategies of Chinese OEMs. Now, this is a very busy slide, and I've borrowed it from our colleagues on the forecasting side, but it shows us a number of different things. Number one, we have quite a number of Chinese brands that have made their way into Europe by now. There's more than 30 brands active in Europe as we speak. They are active both in the volume space or in the premium space. They have selected different ways of going to market, some of them with kind of traditional approaches in dealerships, some of them with a direct-to-consumer approach. And also interesting that many of them have chosen Norway kind of as their first market entry gate. Norway, very small market, but as most of you will probably know, very, very high in terms of electrification, so very strong NEV, BEV adoption rates. Now, our forecasting colleagues, they are differentiating into full forecast, meaning this is a brand that they're expecting to stay. And then there is a, not sustainable / limited forecast for some other brands where, it's not entirely clear. They don't have, full confidence in the sustainability of these brands in Europe. Here we're taking a look at the price-value ratio, and we have picked 2 discrete nameplates that have been very successful in their segment, notably the MG4 and the BYD Atto 3. So we're looking at a comparison of vehicle length coupled to the mean MSRP price. And if we take a little of a line through that, then we can see that these 2 nameplates have been, have shown very strong growth, but also very favorable in terms of their price to value approach. And on the right-hand side, we're seeing that, safety, or should I say lack of safety, is no longer an issue for Chinese OEMs. In the past few years, most, if not all of these OEMs that we're showing on this slide have received the highest 5-star rating, and particularly the Chinese OEMs are making very strong efforts or are doing very strong points when it comes to autonomous features on self-electric vehicles as well. Here we're looking at the anti-subsidy investigation and tariffs that have been imposed in October last year on Chinese OEMs. So here is the timeline, and what has been introduced last year are different stages or different punitive tariffs that are varying from OEM to OEM. Now, to be clear, this is not only about the Chinese brands, but it's also about international OEMs that are producing out or in China and are transporting their product into Europe as well, right? So that's why, yes, we will find Tesla, yes, we will also find Mini, we will find Volvo, for example, that are also affected by these tariffs. But they are varying in terms of their degrees, so there's not one flat tariff that has been imposed, depending on, well, how well the different brands have collaborated with the European Union. So Tesla, for example, only received a 7.8% tariff. SAIC, on the flip side, received a 35% tariff. Now, the big question that we're asking ourselves, what has this done to the demand? So this is what we're answering on the right-hand side. We're looking at the bars represent vehicles sold volumes, and the lines represent the market share of Chinese manufacturers in the REEVs, so range extended vehicles and BEV vehicles. And as we can see, there has not really been a pause in terms of volume. So if we consider that these tariffs have been introduced in October 2024, and if we're comparing that to 2025 year to date, there has not really been much of a pause in terms of vehicle volumes or market share, particularly in the BEV space. Moving on to our last topic, to evolving retail strategies. And well, this slide is titled New Bricks and Mortar. Well, what you can see here is a visual representation of how that new landscape is looking like. We have many different concepts, such as, you know, in mall, in shopping center, small showrooms. We have high street, inner city retailers, such as this one. And then we have, for example, a Neo house, which is a completely new concept that we've seen emerge in a number of major cities as well. So, what is at play here? Most of the European and North American OEMs have established their traditional franchised network, where there's a dealer on the ground who does do the test drives, who does do the vehicle finance, who's also taking in the used vehicle, for example. On the other end of the scale, we have a direct-to-consumer model where there is only an online transaction, basically, and a very highly digitalized customer journey. Now, where most of the disruption is taking place is in the middle, in between those two ends of the spectrum. So this can be considered as a transition, as many OEMs are wanting to go, following the suit or the lead of Tesla and also Neo in their approach to a direct-to-consumer model. This can be considered, the agency model, as a transitionary phase, and it does seem to have a lot of advantages. You would have still physical representation on the ground by a dealer that does do the consumer or customer-facing journeys. But the devil is in the detail, and as we can see on the following slide, many OEMs have halted or possibly even abandoned completely their merge or their move into the agency model. So again, we're taking a look at some traditional OEMs here, with Ford, for example, having basically cancelled its agency plans. Volkswagen, particularly in the UK, have halted their plans in the short to medium term. But there are also other examples that have apparently worked really well, such as Volvo, for example, that has been following the agency model in the UK, for example. Now, on the bottom, we see what is happening with the Chinese new market entries, where there's a good mix, as we mentioned at the beginning, with, for example, BYD following more of a traditional dealership model, and then on the other end of the scale, company like Neo with basically following the Tesla model with a direct-to-consumer model. Last slide, and and I see Juan coming back on stage. But here we're basically taking a look at the three different concepts linked to the number of representations that we have. So those neo houses, fairly small in numbers, but are considered to be, lighthouses where people go to for meetings, for events, for co-working. They have cafes in them, etc. BYD, with typically being located in very city centers, but they also provide typically much smaller in terms of size. And then the final one, Mercedes, which really is in a transitionary period right now, with very large outlets typically, and as we can see on the map, quite numerous as well. So I've gone over by 1 minute. Apologies for that, but I thank you very much for your attention, and happy to be here.